Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video I am going to be teaching you the best 3-step trading strategy with no complicated rules, easy to implement into daily markets and daily setups for trending markets. Now watch this video all the way up until the end to fully understand the strategy. And this strategy is going to be explained using a signal that I sent to my team on Discord. As you guys can see, I entered NAS 100 longs over here and they did hit TP using this 3-step strategy. Now speaking about signals, those aren't the only things that I have in my mentorship. I also teach many strategies and one of them is the ALQ strategy. This strategy alone made 14.6 RR in the last 4 days, literally 30th of September, 1st of October, 2nd October, 3rd of October. All of these results. Here are some of the results on the right hand side of the screen. So if you guys want to learn this strategy, get access to the signals and many other things, check the first link in the description to get inside of the mentorship. But without further ado, let's get right into today's video. Alright everyone, so here we are with the strategy, and I call this strategy the BEST strategy. Obviously that stands for the best strategy, but regardless, let's go into what each of these letters mean. So the first one is the B, and that stands for break of structure, because this particular strategy is best for trending markets. So that means when price is either moving bullish or price is moving bearish. So let's say you're on the 10-minute time frame, you're going to zoom all the way out on your chart and you're going to identify the trend. And then the first thing you look for is the most recent break of structure. But yeah, the second part is entry from a zone. This would be a supply zone, demand zone, fair value gap, whatever kind of zone you're used to trading. And the third step would be ST, which is SL and TP placement. This is going to be one of the most important things to understand with this particular strategy, because this can be the make or break of your trade. You can get stopped out and the trade idea could still pan out, and you could get so close to TP then price can reverse. So I'm going to be teaching you how to do these 3 things in the best way possible. And again, another caution, this only works in trending markets. So if price is consolidating or it's not being very clear on which direction is trending, then go ahead and use some of my other strategies on my channel. So let's move into step 1, which is break of structure. First thing you need to understand is that the overall trend, so we can understand our price range after a break of structure. So in this case, we have a bearish trend, and we have a bearish movement in price because price is creating lower lows and price is creating lower highs, and we have break of structure towards the downside continuously. So what do? We understand the overall trend. So we need to find a price range after break of structure, and the most recent break of structure we have is this break of structure right over here. Therefore, the price range we are dealing with is between this high and this low over here. So when we take our trade in the next step, right, it's going to be within this price range, so not above this high and not below this low. And because we now have this price range, we know if it's a bearish structure we're going to be selling, so our trade will be above the 0.5 level of this price range, so it's anywhere over here basically, right? And yeah, that explains step 1. Find the most recent break of structure which is in line with the overall trend. So in this case we are bearish. The most recent break of structure is the break of this low and price went lower, and identify your price range and identify where the 0.5 is of that price range. So here's the price range, here is 0.5. We will be trading anything above this when we see a zone in this area. Next is the bullish break of structure and the bullish trend. So over here we have a bullish market and it is trending towards the upside, because we can see break of structure towards the upside, towards the upside, towards the upside, higher highs and higher lows, right? So we look for the most recent break of structure. Our most recent break of structure is this one over here, right? And what do? We identify the price range. In this case, the price range is this low and this high. So we then draw up the 0.5, and we know our trades will be taken from anywhere below this level within a zone over here. Very, very simple first step. identify the most recent break of structure, draw up your price range, and take an entry below the 0.5. Don't worry about the entry for now. Just find the most recent break of structure, do calculate the price range, so from a high to a low or from a low to a high, and then understand your entry should eventually be from above or below the 0.5 mark. And the reason we do that, just for an insight, is because we want to be trading in the discounted or premium levels so that our entry and our RR is the best possible for the trade. Move on to step 2 now. We will be entering from a fair value gap or a supply and demand zone. Very, very standard here to be entering from these things. So in this example over here, for a bearish entry, a supply zone would look like this, which is the last up candle before the down move, which caused a break of structure. So let's just say there was some previous structure here, and we had a BOS here. The last up move before the down move, which caused the BOS, that would be this supply zone over here. Let me just clear everything up. So again, bullish candle followed by a bearish candle, that is our sell order block or our supply zone. Fair value gap, very, very simple zone again. When we see a high momentum candle such as this, we expect there to be a fair value gap, and we mark it up by using the wicks of the candle surrounding it. So let's just call this candle 1, call this candle 2, call this candle 3. We get the bottom wick of the first candle, we get the top wick of the third candle, and the body of the second candle is what we mark up as our fair value gap entry. As you guys can see, this is all body. Same thing as we go across to the bullish example. We can either enter from a demand zone or a bullish fair value gap. In this case, I have shown the example of a bullish fair value gap. And as we can see here, again, if I mark this up candle 1, candle 2, candle 3, we take the wick, the top of it from candle 1, we take the bottom of the wick of candle 3, and we take the body only of the candle 2. And as you guys can see, we get left with this area of candle 2, which is the fair value gap or the imbalance, whatever you want to call it. And that is how we can take a bullish entry. So these are the two ways that you can be taking an entry on the two types of market. So bearish entries and your bullish entries explained right here. The important part, SL and TP placement. Your SL goes at the last point of inefficient price action, and your TP goes at the next high or low, depending on what the market is. So I've got to add that in. So your TP goes at the next high or low, depending on whether we have a bearish entry or a bullish entry. So let's talk about what I mean by the SL goes at the last point of inefficient price action. In this bearish example over here, we can see that price has a supply zone right here. I'll just put the initials for that, supply zone. And here we can see we have a fair value gap. Now, let's say I take my entry from this fair value gap. So I will put E for entry over here. Can I put my SL over here? No, I cannot. Why? The reason why I can't put my SL over here is because there is another point within this range where there is inefficient price action that price could potentially come up to and go into, trade into that, and then reverse, right? And I don't want to be stopped out in this trade idea. So I need to look for the point where this trade idea becomes invalid. And that is the point at the last point of inefficient price action. So here we have a supply zone. Price could potentially come all the way up to this supply zone and it could trade us, and then it could drop off and our trade idea would still be fine. However, if price trades above this supply zone, then we know the trade idea is no longer valid, and therefore there is no point holding this trade if it goes past the supply zone. So there are two main things that you need to understand when it comes to stop loss placement. First of all, making sure the inefficient price action of your range is within the stop loss. So these supply zones, this fair value gap, this tiny fair value gap over here, and this supply zone is all within our stop loss, just in case price wants to come up, trade into here and move down. And we know the point of invalidation for this trade idea. The point of invalidation for this trade idea is right over here, where we can see this high is supporting this range and is supporting the supply zone. And if price breaks through all of these levels over here, then we know the trade ID is invalid and we should secure and take our capital off the table with a loss, but we have managed the trade well in that sense. That is the first thing you need to understand. And the TP will just go at the next low of the trend. So let's say we have a bearish trend, and let's say you enter right here. Your TP will go at the next low, which is right here, as we expect price to trade below this level as we have a bearish market. Very, very simple in terms of TP. The real difficult part is understanding where your SL goes. In this case, we have a bit of a more complicated example. And the reason I say that is because people may be wondering where you would put your SL here. Now, some people will be saying to put your SL over here. Some people will say over here. Some people will say the bottom of the fair value gap. And some people will say at the 0.5 of the fair value gap, right? There's so many different opinions. Again, go back to the two rules. The last point of inefficient price action is the first most important rule, which is here we can see that there is a bullish order block. Price mitigates it, so we don't need to worry about this low as price has already taken care of the price action over here. So this is all efficient price action. Here we can see that there is a bullish order block, so a demand zone, and there is a level of fair value gap. And remember, the fair value gap starts from this candle all the way through to this candle, all the way through to that candle. So if we want to secure our point of invalidation, then it needs to be below this low over here, where the demand zone and the fair value gap is. And this is also the last point of inefficient price action, as price may decide to trade below our fair value gap over here, right? And it may decide to fill in this order block right over here. So we need to put our stop loss within the points of inefficient price action. And we also need to put our stop loss at the point of invalidation. So if price takes out this low, right, and takes out this demand zone and takes out this fair value gap, then the trade ID is invalid. So we have to take our capital off of the table and make sure we're not losing more than we should. Okay guys, so this is the 3 steps for this strategy. I have now taught you how to sort of understand the overall price action and get a range, how to enter, and how to manage your trade properly so that you're getting the best out of every single trade. What we're going to do now is move on to the real life chart example and understand how we can implement this on our actual technical analysis with that beautiful signal that I sent on the NAS 100 to my team on Discord. So I'll see you guys in just a sec. Okay everyone, here I am on the NAS 100 and we are now going to start this trade breakdown, keeping in mind our 3 steps. So let's just write that down over there: B, E, S, and T, right? And you guys should all know it by now: breaker structure, entry, and SLTP placement. There we go. So we're going to be referring to this every single time we do a new step. So let's go on step 1, which is all about the break of structure and understanding the overall price action. Here I'm zoomed all the way out, basically on the 5-minute time frame on the NAS 100. You guys can see very clearly what kind of price action we have. We have very, very bullish price action, and at the moment it looks like there is no stopping price. We can see very bullish price action. Now, price action from over here is not completely relevant to what we have over here, as almost a week ago. So let's zoom in a bit more and understand what we have on the 5-minute time frame. Again, very bullish price action. We can see recent break of structures towards the upside, higher highs and higher lows being formed. Now let's look at the market efficiency at the moment. Our most recent mitigation was right here, with this order block being mitigated by, this level. So get that mitigated by that low, and now this order block was mitigated by this low over here. So we've seen that our most recent mitigation was of this zone, and it was taken care of by this low. So just for future reference, we know that this low is going to be important. But yeah, we'll keep that there for now. Now let's move on to the actual break of structure. We can see price has broken this previous high, and we now know our trading range is between this low and the newly formed high all the way up here. Right? I can just play one more candle to show you that this is the high that we have created. So our high and our low right there, and this is now our price range. So what I can do is I can bring out my Fibonacci and just get a general understanding of what the price range looks like. So we can see that our price range, our 0.5 is right over here. So we will be taking entries anything below this point over here. So we can take entries from anywhere from there to there, right? If our entry is above this level, then we will not be taking it, as it will not be worth a trade. The trade will be like a 1-to-1 and it won't be worth it. So that is the first step taken care of. We marked up the breaker structure. We understood the overall price action. We saw our range is from this high, from this low to this high over here. And we now know where our entries can be taken. Step 1 is done. Step 2 is our entry. In this case, it is very clear what our entry will be, and that is right here at this fair value gap entry. Very, very simple. It also lines up with our golden lines here at the 0.7 and the 0.75 of our Fibonacci. Again, this is a very easy entry. As we can see, candle 1, the top of the wick is here. Candle 3, the bottom of the wick is there. And our body is our fair value gap. So this is where we will be taking our entry. Very, very simple. And we now move on to step 3, which is SL and TP placement. So let's talk about the SL placement, as that is the tricky part of this trade. The SL placement, right, will need to go at a point of the last point of market inefficiency, and it will go at a point where the trade becomes invalid. So what can we see here? We can see that price, in this case, we have a fair value gap over here. And for example, let's say I went to the 3-minute time frame, we can see we have an order block over here as well, right? And we also have this low over here, which is an important low, as this is the low of the range. So I don't want to get stopped out if I put my SL here, because price may come down and mitigate some lower time frame OBs within that little wick over here. And I also don't want to put my SL below this low, as this is the point of invalidation. If price breaks through this low, then we know the trade idea is no longer valid, as you know, this would be a market structure shift and price could potentially shift towards the downside. So we put our SL at this low, and this will be the point of the point of invalidation for this trade. Our TP will go at this high. However, this isn't a 1-to-2, and for me, I target minimum 1-to-2. And because we know price is going to formulate a new high above this previous high, then that is fine, and we can go for a 1-to-2 in this case. And our entry can go there. That is all fine. Very, very, very simple trade. Now let's play this out and let's see how it goes. Remember, all it took was these 3 steps: BOS, entry, and ST. Let's play this out. Tagged in there. And just like that, we get tagged out right there on a 1-minute time frame. We can see how this trade went. Entry there, TP there, done. 2 RRs secured just like that. And this is the exact system that I used to send a signal to my team to help them gain 2 RRs. And if you would like to learn more about this style of trading and learn more about the way I trade and get signals and things of that nature and gain access to the ALQ strategy, make sure to check the first link in the description to get 20% off on the mentorship. But yeah, hopefully you guys can take this strategy and implement it into your own day-to-day trading. Thank you all very much for watching, and I will see you in the next one.